Hi, this is James Shrug with Westpac London's end of day report for Friday, February the 22nd. It was a positive day on equity markets today. We had the German IFO Business Climate Index for February come out. It rose to a 10-month high. The actual level of the index was 107.4, up from 104.3. That's its fourth rise on the trot. It was split 1/3 current conditions, 2/3 expectations. Expectations actually at their highest in 18 months. And the second consecutive rise in the current component suggests that the fourth quarter GDP contraction in Germany won't be repeated. I mean, on that, we had the detail published behind that -0.6% fourth quarter fall in GDP. And the breakdown showed it was mainly driven by exports, capital spending was a negative, and construction also was down slightly. Consumption spending was up 0.1% after a flat third quarter. So subdued, certainly, but the contraction that we saw in the fourth quarter looks like not being sustained. Our current forecast is it might be another very small negative or about flat in the first quarter. The European Commission published their forecasts, their winter forecasts, included a downward revision to the current year, 2013, from a 0.1% expansion in their autumn forecasts to a contraction of 0.3%. That's really not debatable. We think it's going to be -0.4%. The fall in GDP at the end of 2012 pretty much locks in a negative for European growth in 2013. Where we differ is that we're looking for -0.5% growth in 2014, whereas the European Commission left their forecast unchanged at 1.4% expansion. Canadian CPI, it was just 0.5% in January, annual pace. That's its lowest since the recession last decade, and the core rate at 1% was its second lowest, I think on record actually, the lowest being a temporary dip to 0.9%. That was in 2011 in the aftermath of the Vancouver Winter Olympics. So a very soft inflation report, and also retail sales in Canada were down just over 2%, led by autos, but ex-auto down almost 1%. So soft inflation, weak retailing at the end of last year. We've got Canadian GDP numbers coming up next week. They'll probably show modest growth, 1% expansion, we think, in the fourth quarter, annualised. That was it on the data front, nothing to report out of the US. As I said, markets are higher. The German IFO certainly helping things along, and earnings reports and forecasts from the likes of Hewlett-Packard, TI were helpful as well. So heading into the last hour of trade in Europe, we've got the FTSE up almost 0.5%, French market's up 1.7%, the Germans are up 2/3%, and there are gains of well in excess of 1% for Spain and Italy, and the Dow at the moment is up 0.4%, it's at 13,938. Commodity markets have, well, they've been down quite sharply in the last few days. Today we've seen gold slip a further 1/3%, with $1,573 an ounce being the price. Oil was unchanged, $92.80 a barrel, and copper is down 0.5% today. Aussie dollar is at 1.031 at the moment. It was higher, a little bit higher earlier today, around 1.034. It certainly jumped after Glenn Stevens' testimony, which markets took to mean that the chance of a rate cut in the next month or so perhaps wasn't quite so high, although we still think they'll cut rates in March, particularly if the investment intentions spending survey next week is weak. But apart from that, there's really not much else to report today. I'll be back again next week.